We are starting now. Welcome back to the Money Mastery Unleashed podcast. Adam Olson, your host with you today. Today, I got one of my childhood friends with me today, a special guest, Derrick Reinhart. Derrick, how you doing today?
Doing pretty good. How about yourself?
I'm good, man. Thanks for doing this. I know you're a busy guy, and I appreciate you take the time in your day to help some people out here.
Yeah, I don't even know how I found the time to do it.
So I grew up with Derrick. We grew up in Atkinson, Nebraska. First memory I have that I can actually remember is the APD Gym Rats back in the day, the basketball team. And then me and you listening to 50 Cent Get Rich or Die Trying my sophomore year of high school on basketball teams. That's my most fondest memories of Derrick in high school.
You didn't tell me we were going to go that far back. Gym Rats, jeez.
But today we're talking about business. We're talking about real estate, something that Derrick does right now. And I know you're super passionate about too, Derrick, because we've talked about it a little bit here and there. But walk me through. So Derrick gets done with school. What does your work look like after you've graduated school, and how did you kind of get started in the real estate and business world? Walk us through that quick, if you would.
Yeah, so I just graduated from University of Nebraska with finance and marketing degrees, and just had a job at an internship. I had a passion for computers, so I worked at this one place with an internship, and a lot of downtime in between things I was working on. So I was always just browsing real estate on the internet. And I always think big, and came across this property I never thought we could afford. Went to some family and friends, and we found the money and scrapped it together and bought this 16 townhome complex. And that's how the first thing got started. And then just kind of from there, just went from real estate to business and more real estate. But that was the one that got started. It was basically just in my spare time, instead of being on Facebook and Instagram, I would browse the internet for businesses and real estate and kind of just go from there.
That's awesome.
Yeah.
So after you graduated college, what year, like how many years was it before that first deal happened?
I graduated in 2011, and it was like 2013. So it was about a year. It was 2013 by the time we closed, but we started looking at it in 2012. It took about 4 to 6 months to get it done. But yeah, so it was a year or so, a couple of years.
Yeah, that's awesome. And then how many years did you do? You still worked the job while you were still doing the real estate and business?
No, yeah, I did. I worked at that same company I did work there 3 more years even after that. So again, in my spare time in between my job duties, I was at a computer all day. So I was able to use different computer applications and the internet and really just kind of use it as my side hustle. I did my side hustle while I was forced to be at my desk job instead of doing it when I got home. So that was kind of nice. I would do it while I was at work. On my lunch breaks, run over to the property and show the units to potential tenants and so forth. But yeah, that's really what I did, is just use a lot of my time at work. Luckily, I had the opportunity to do that to further my ambitions. So,
dude, that's a really cool story, because I think so many people think that they can't do anything else when they're working a 40-hour work week. You know what I mean?
Yeah, and a lot of people, they burn out of their job and they do other things like on social media and their personal stuff. But I try to use that time, because I was forced to be there anyways, to get out of that desk.
That's awesome. That's a really cool story, though. And I mean, I think a lot of people could use that to say, hey, you got an extra 2 or 3 hours a day. Instead of doing pointless, meaningless things, take some time to better yourself and do some research.
That's one of my mindsets these days too. I think a lot of jobs, you could really condense it down to, it's a 40-hour work week, but you could probably do most of your work in 20 hours.
Yeah.
They expect you to have that downtime. So you want to use that downtime to do something productive to get out of the spot that you're in. Not every job allows you to do that, but a lot of jobs probably do. A lot of desk jobs probably do that.
Yeah,
especially
I love you.
Especially if you have a computer in front of you too. I mean, that's the most powerful tool. That's the only thing I work on these days is on a computer. I do all my work through there, find opportunities and stuff. So why not utilize that time?
That's awesome.
Yeah.
There was an article I read a while back. It was a guy he worked online, digital, right? He had 3 jobs that were each paying over $100,000, and they were all full-time jobs, and he did it all in a year while working no more than a total of 40 hours a week.
And nobody knew. He was working 3 different jobs.
The companies didn't know. They had no idea.
Yeah,
it was an article in, like, I think it was like the New York Times or something like that went all over the place back in January. It's like, so what you just said is extremely true.
Yeah, and the work from home days especially, you could definitely do that. Nobody would know if you had another full-time job that's really not full-time.
Yeah. So walk me through, what's a day in the life right now, Derrick? So like, what is your day in and day out look right now?
It's pretty easy going. I kind of just set my own schedule. I oversee the businesses and the real estate, but most of the time it's just focusing on looking for other opportunities. I don't do a lot in the day-to-day of my businesses with the real estate. But obviously back in the day I did. Back in 2016, I was getting up at 4:30, 5:30 in the morning to go into the business. Again, use my spare time to work my way out of that. Kind of just kept using the same formula over and over to get away from what I wanted to do. So it's just step by step. But yeah, really, I just look for opportunities, connect with friends and family on opportunities, and just see where it goes. I'm not spending 24 hours a day looking for opportunities because I got to the spot where I wanted to be in life. That's just kind of taking it easy now, but it was a lot of work to get here.
Yeah, it doesn't happen overnight.
No, 10 years. That's what I always tell everybody. Yeah. If you just put your head down for 10 years, you'll wake up and be like, wow, that's where I'm at today. I woke up. Where I'm at today, I'm just kind of like, man, it took a long time to get here, but now I'm like, well, I have 50 more years left. What am I going to do for the next 50? I'm like, I'm here. So that's one thing I wish I would have done a little bit differently, is not been in such a rush, but I'm glad I did. There was a reason I was in a rush for that. It was for future kids and family, that I wanted to build this wealth. So once I got to this point in life, that I could use that money to continue to grow my wealth while I'm able to spend time with my kids. So we had kids a little bit later, not late. It's not late anymore these days, but early 30s. And so I knew from 25 to 35 that I was just going to put my head down and get that money built up. So that way, when I step away from my work, that I can still be building my wealth while having time for my friends and family. So.
Yeah, I love that approach. Do it while you're young and you have time before kids, and then put the energy into the kids.
Yeah. So that's what I'm working on right now. Actually, I have a 4-year-old and a 2-year-old, and so these days I'm kind of like I was just putting my plate over and over again, just piling on work, piling on different deals. Now I'm kind of offloading that into passive stuff, but I had to put my head down for 10 years to be able to get to the point I wanted to be at this point in time. So
I love it. Derrick, I mean, in my job, I get a lot of people that ask me about real estate, rental properties, commercial properties, residential properties. And, everybody has this vision based upon social media that literally all you do is buy the property and the cash just flows in. It's that easy.
Mm-hmm.
Right. And obviously you and I both know it's not quite that easy. So walk me through, Derrick, like when you're looking at properties, whether it's residential, commercial, whatever it is, what do you kind of go through? What's your kind of checklist that you go through? Because I know you're in different areas too, different regions as well. What's like your process look like when you're looking at buying real estate?
Well, the first goal is make sure it cash flows enough to make the payment. That's step one. But
right off the bat.
Yeah, I mean, no, not right off the bat. Right off the bat would be a feel for what you feel is. For me, I know Omaha, Nebraska. It's nothing. You're not gonna have big ups or big downs. So I like investing here locally because you know what you're gonna get, and it's gonna stay there and continue to do. Where if you go invest in Florida, which I've also done with a small portion of my investors and myself, is that's gonna have big ups and downs. So you gotta kind of catch it in the right moment, but you don't necessarily have to catch it in the right moment because you can be prepared. But when I look for property, it's more like a feel for the economy as a whole, where people are looking, what people are looking at. So like right now, I'm not looking at office space at all. That's because of people are working from home. There's an abundance of that. So it's going to be a while before that evens out. And office space will always be needed, but it's going to take time. So that's an example I don't look at. I don't look in like really commercial areas because that can get too much competition, I guess. I like looking for like strip malls and close to neighborhoods because that's always going to be needed. The close proximity to where people live, that's kind of where I've been looking for that. But the real thing we look for too is between like a 7% to 10% cash flow after debt payment. If you're in that zone, you're going to be pretty good, and that gives you some leeway to have a little bit of ups and downs, or if you have big expenses come out. That's a rule of thumb that we like to use, is between 7 and 10% cash flow after debt payment. But with interest rates these days, that's changed a little bit. But we're still buying because we know interest rates are going to drop eventually. And if they don't drop, then we got them at the best interest rate we possibly could in current time.
So isn't the general consensus then you would say too that like when interest rates do come down here at some point in time in the next couple of years, you're probably going to see these valuations jump again of any type of property?
Yeah, I think so. I think commercial is going to be a little bit more consistent to what it was just because it's based on a cap rate. But those single family homes and residential, I think those will really jump up again because you could sell it to another investor or you could sell it to somebody who actually wants to live there. and that's just be based on the market. Those properties don't really change based on what you rent them for, unless they're multifamily or bigger properties. They're just going to sell like what a home would sell for. So, but I do think interest rates will definitely come down. I think we're plateauing right now for sure. But I'm not an expert in that field, so I can't say for sure. But it seems like they're going to keep it here, and I think they should until things level off, and then they'll drop. But that's what opens up the good buying opportunities too.
Oh yeah, that's for dang sure. That's for dang sure. So have you been steadily buying, saying like in 22, 23, you've still been buying some stuff?
Yeah, yep. We just bought something this past month too, another commercial property. Last year we bought some Airbnbs in Florida, but yeah, it's that same thing happened in Florida. With interest rates went up, there's a lot more people selling and a lot less buyers because people get scared. But when they're scared, and we were scared, but that's when you should buy. And that's one thing that I found was that I'm able to do is, even though I'm scared, I still do it because I know it's the right way to do it. And it's hard. It wasn't always that way. I was always buying high, selling low until I realized that wasn't going to work long term.
You got to kind of have a little bit of a stomach to do it.
Yeah, and it doesn't get any easier, I'll tell you that much. But in time you get a little bit easier and easier.
So before I hop into like the Airbnb stuff and those rental homes and stuff, can you tell me, like, when we have commercial properties for sale, say there's a commercial property for sale and it's not even close to cash flowing with the debt payment on it, how do investors come in and think that's a good idea to buy that property?
Well, if you do the math, don't do the math on what the property, and for that example, I'm saying you should do it this way, but for that example, to answer your question would be, when you leverage money, you're going to make good money. So even if it's not, because most of your money on a commercial property or rental property is going to be on the appreciation of the property.
Well, that's what they're banging on.
The loan pay down. So the cash flow, like I said, ends up being about that 7 to 10%. I would say paying down the loans another 7 to 10% return on your money is what I'm talking about here. And then the depreciation is going to be your big chunk. That's going to be it could be anywhere, like Florida it could be 50%, and that here in Nebraska could be 20. Like that, it could just be that, but it could fluctuate that much. But usually in Nebraska, I would say it's about 7% to 10% cash flow, 7 to 10% loan pay down, and then your other return is probably around 15, maybe 10 to, it could be 15, around 15% would be the average, but it could be 20, could be 10. But generally speaking, you're end up around 25 to 30% total in most deals. So your return on capital, so if you take out, if it's just making the debt payment, you're still making 20 to 25% on your money, which is double the stock market, triple the stock market on average. And then you take that over 10 years and you're going to make way more money.
And you'll be just fine.
Yeah. So the properties we are buying right now, they aren't cash flowing like this. Like my examples before, where you try to get that 7 to 10% cash flow. But it's only because of the interest rates. So you take out the interest rate, or if it goes down 3% here, and we are getting better prices, a little bit better, not a ton, because like Nebraska doesn't change that much, but we are getting better prices with the higher interest rates too. So you got to take that into account too.
Yeah.
So
they're not paying as much for the actual property.
So our recent example, we're buying at 8% cap rate, which before, back when things are going crazy, which I think they'll go crazy again, people were buying at 7% cap rate, which increases the value by a lot. And it's only 1%, but once you look up the cap rate formula, you'll see that changes the value a lot.
Yeah, that's interesting. So, Derrick, how did you get started in the real estate world? Like, was it always a passion of yours, or did you just do a bunch of research on it and it's something you decided to go into?
Yeah, so I knew I wanted to do something on my own and make my own destiny. So real estate seems like it's generally pretty easy to wrap your head around. You buy a building, you rent it out. So, and it was very passive. So I was working full time, wanted that to be passive. It's something I could have handled while I was still working my job, kind of being safe. I went about it like a methodical way. I didn't just jump in and quit my job and start a business, which you can do. And I don't say to not do that, but I did it in a methodical way to where I had some investments going before I jumped out completely, because I was able to do it. So I'm like, why not do it both at the same time? In my 40 hours a week, I was able to do two things, and that's kind of where I got started. And then from there, I'm like, well, it is kind of slow moving. Real estate can be kind of slow moving, but long term, you're going to make a lot of money on it. And it's kind of funny. I'm going from real estate to business because I knew business was the fastest way to make the most amount of money. And I want to do that quickly, like everybody does when they're young. And now I'm transitioning back to real estate because I don't want to do all that hard work anymore.
The time part.
Yeah, that's really it, definitely. But real estate's it can be easy if you have somebody manage the property for you. That makes it easier, but you lose some of your return on that if that's what you're planning on, which is about 8 to 10%.
That's what I was going to ask you. So on these, whether it's the commercial or the residential properties, Derrick, are you managing those yourself, or are you outsourcing that?
I take on the easier ones, like the commercial ones that we rent to businesses, for example, because you're not changing tenants all the time, and tenants are responsible for pretty much everything that goes on in the building. So any repairs, maintenance, unless it's like the roof, a wall, or anything like that, the tenants would take care of everything themselves. So, and they have usually 5 to 10 year leases, so that's pretty easy just to, hey, pay your rent on time. where if you did like a rental residential, you're gonna change somebody once a year, and that's a lot more work for sure. So we do have management for those properties these days, but not at first.
Yeah.
At first I did do that. So.
Well, that's another cool story too. You know, that you had to put in the time managing those own properties when you were first starting out. Now you're able to outsource it and free up more of your time.
Yep, that's exactly what we're doing. So
what do you so let's talk a little bit about like the Airbnb deal, you know, where people are just buying, you know, vacation homes, let's say South Dakota, Iowa, Florida, Texas, California, wherever, and they're renting them out thinking that it's going to be a gold mine. But it's a little bit more complex like that. Like you said, you got to find the right deal, you got to find the right market, you got to make sure it's in the right area. Walk me through your thought process on when you do those type of, like not a commercial house, but like a residential house that you want to rent out.
Yeah. So for me, we never been in the Airbnb space, so we actually bought ones that were already Airbnbs.
Yeah.
But
Okay.
your return's not going to be as good on those because you're paying again that cap rate. You're going to pay because it's already there, it's already going, it's already making money. So you're going to pay based on what the property's worth combined with cap rate, which generally comes out to be about the same. That's kind of just goes into the whole value of real estate. But you could definitely make more money finding just a house yourself, fixing it up, putting the furniture in, making it Airbnb, because that's going to increase the value of the property. Where we didn't bring much value, is more of like just an investment to us. But if you went and found a house, painted it, cleaned it up, just like as if you turn around and sold it, it's going to be worth more. Just the same as you turn it into an Airbnb, you're adding value to that property. But we just didn't want to go that route because we were new to it.
Yeah.
Now we have looked. Now we've kind of dabbled in looking, at least looking. We haven't done anything at ones that aren't Airbnbs and be like, hey, what can we make this look like our Airbnbs? And would that increase the value based on what rent could we get if we did that ourselves? Because the value of the ones we bought were based on the rent they're already getting. So we're not adding anything of value to it. We're just taking on that investment.
Gotcha. And those are all, is like that all outsourced to like the management of that thing, the renting out, the payments, all that's outsourced?
Yep. Currently it is. Within the family though. We have a family member that's down there in Florida who's a realtor, and he's looking to get into property management of these Airbnbs as a side hustle for him as he's selling real estate. So he's a partner and a manager of it. But yeah, essentially we do have a management company in place for those.
That's really nice.
Yeah, it's nice because he
really
gets some invested interest in it too. So yeah, it's been working out pretty good.
Yeah, that's really good. So he's got skin in the game too to manage the property the right way and make sure the right things are going on in the property too.
Yeah, the one thing about Airbnb too I want to touch on is that it's getting very saturated right now. So one thing we did focus on when we bought ones was bought very specific locations, like right on the water, because there's only so much coastline. So they're not adding coastline. So we didn't want to buy something like just on an island in the middle or some key in the middle. We really focused on, we want to be on the water at least, because if people are looking to rent, they want to be on the water. That won't go anywhere. Where something in the middle, you can have 1,000 houses on the middle compared to 100 on the outside of it, for example. So
yeah, that is a really good thought process. And are you visiting these places like in person before you make offers on these things, or do you just knew the area well enough that you're like, this is what we want?
My cousin we've been talking about it talked about and looked at it for a year or so before we ever made it. Actually, a couple years, 2 years. Um, so we had a good idea of what we were looking for. Then with him down there talking about the area and FaceTiming, doing the tour. And it really is just about the numbers for us. I mean, if you look at the video, he's doing the walkthrough and it looks great. It's in an area he says is great, and the numbers are showing this, then it works. So
Yeah. How do you think about Derek, like for your personal portfolio, your personal real estate? How do you think about the differences between like residential and commercial? Like, do you ever think about the balances that you have between the two or not? Or is it more on just a per deal basis?
hmm. It's on a per. I would say it is on a per deal basis. I do like being in both though.
Yeah.
Residential, that value. People need places to live. That's kind of
Yep.
where it's at. People need places to live, rent, so forth. So that's always going to be there. Where with commercial, the people who are going to spend money at certain places could be developing a new area, and your area might start to go down. You know what I mean? So I like to be diversified in both for sure. The thing about commercial, like I told you before, it's a lot easier to manage, and I think that's why people eventually go from residential first, because it's easy. Residential first is easier to buy because everybody's putting houses up for sale all the time. There's always houses for sale, except now it's kind of a weird space. But generally speaking, you can find a house and buy it. Where commercial, there's a lot less commercial zoning and a lot less people who are willing to sell, because a lot of people with a lot of money buy those up because they're easier. So they don't like to sell them. And that's how I am too. We've never bought anything that we've sold yet.
Oh, you haven't?
Haven't
You
sold
haven't sold
anything we
anything?
bought yet. Yeah, I'm a buy and hold unless something changes drastically with the economics of that property. Why not hang on to it? You can always do a loan against that property to buy more properties. The only time I'd ever consider is if I was doing a 1031 exchange into this deal that I just wanted to do that was too big. I didn't have the money to do it without selling. That'd be the only reason I would ever sell, other than if the economics of that specific building changed.
Yeah.
Like if it started being run down area, for example.
So you're probably constantly evaluating your properties there, thinking like, hey, is this area going down?
Yeah, that very first one we bought, we've had it for 10 years now. There's been times where like, is it changing? And then you'll see somebody remodeling this whole house and flipping it next to it, and you're just like, well, maybe the whole area will redevelop at some point too. So it's just kind of hard to know for sure. But that's what I like to do when we're looking like at those Florida houses or any commercial property. I like to look, is this going to be good forever? I like those like strip malls. I think would be the last commercial thing to go away, because that's where you have like your dentists, your chiropractors, your local bars and so forth, things like that, where your daycares, those are in those little corner strip malls of the neighborhoods. Those are all needs. They're not like some retail shop at a mall that nobody necessarily needs. Those areas I think would go down before any strip mall. So that's kind of why I like to look at those close to residential commercial, not like real commercial areas. That's just the mindset I have. Not saying I wouldn't look at those, but it just has to be I just have to look at it and decide.
Yeah. Well, Derek, let's just say we have somebody that, let's say they're in their mid 30s, they're doing good, they got a pile of cash sitting around, and they've really been interested in getting some real estate of some kind.
Yeah.
Like what you just talked me through, I mean, it's not an easy thing for the average person to do, right? I mean, you don't just one day raise your hand and say, I'm going to go buy some real estate and do it. So what advice would you give to somebody who's never dabbled in real estate before, never really done much in it? What are some steps that you think they should take if they're interested in getting, for example, like a rental property or looking at commercial properties to rent out? Where do you even start?
Yeah, I would have them start by calling Adam Olson and having them give my number to him. No, I don't know. I would read. I mean, the books aren't like, I'm not some financial wizard. I'm a normal guy from a small town, and I just watched a lot of videos, read some books, read articles.
Educate yourself.
Yeah, really, that's what it is, and that's kind of what I do.
Yeah.
Like I've educated myself more than I ever did in school. I used to hate school, but now I'm teaching myself. Like, why did I pay attention in school to somebody who knew what I was trying to learn? But when you're younger, you don't know what you want to learn, and you want to have more social aspect. But now I'm always reading articles about where's the market going, what's real estate looking like, watching videos on how are other people doing it, especially TikTok and Instagram videos these days. You can watch. Don't trust everything these people are saying on there. There are people who are spending it bigger than what it really is. I promise you, because I've looked for the deals that they talk about, hoping for that pot of gold, but they really spend it in a way that's not true. I'm not saying they haven't found those deals; they've gotten lucky, but the majority of your deals are going to be people who have these properties are selling them. They're smart people too. They're not just going to give them away.
Correct.
So you're going to have that cap rate, that valuation based on rent and so forth. But you just start with one. Start with one. You'll know. And then I figured with those financial numbers I gave you, you can pretty much double your portfolio every 4 years without putting more money in. So however much money you put in, however many properties you get, if you buy 2 in 4 years, you can refinance out money, unless there's like a huge market crash or something. In 4 to 5 years, you refinance out 2 and you buy 2 more. Then you go from 4 to 8, 8 to 16. You really could do that. We chose, instead of trying to find smaller individual properties, to go with those. We went from residential to commercial, because when you get the money at a certain point, you want to just buy one property, and it's hard to find a house expensive enough or to rent to buy that is where you put your money in one spot.
Yeah. And you're using leverage. Essentially, that puts your returns on steroids when you use leverage to buy these things. If you do it right.
Yep. Like I said, that earlier example, most of the return came from just owning the property, not necessarily cash flow of the property. So that's just telling you, like, the leverage is what's giving you most of the value. Is having the house, just having the property pay for itself is the value. Cash flow is a great bonus, and you want that cash flow to pay for maintenance, unexpected things. If it comes up, hopefully nothing does. But your real value, your real return is on appreciation, because real estate's been appreciated forever, and it will continue to appreciate forever, even more so today. And then 2, the loan pay down. The loan pay down by itself is just your return as a stock market. So if all else is equal and it doesn't appreciate, you don't have cash flow, at least you're still making like a stock market. You would in the stock market. But chances are you're not going to have just one. You're going to have cash flow, you're going to have appreciation, and you're going to have loan pay down. But even if you just have one of those 3, you're going to be just fine.
Yeah, the secret is to get all 3 of them at once.
Yeah. Well, that's how it should be. The only reason it wouldn't be all at once is because your interest rate is too high. Or you bought at a bad price. That'd be the only. But you find, if you're patient enough, you can find deals. And it does take time to find some good deals. The deals sometimes people don't want to sell. That's the one thing about Nebraska. It's steady Eddie, so people have the same mindset as me. They don't want to sell. They hang on to what's good. But with my connections and stuff over the years, I've dealt with business people and real estate people that they are offloading to do other projects. So they call me because I just tell them, hey, you don't need a realtor to sell this place. Just give me a call whenever you're ready. Just always putting the word out. That always helps.
Yeah, just putting feelers out there. And it's nice, too, that you know what you're looking for.
Yeah. I've also just drove around, saw buildings I liked, looked up their names online, sent them all the same letter saying, hey, if you're ever looking about selling, don't hire a realtor. Sorry, realtor people, but call me and save them 6% on $1 million. That's a lot of money.
Yeah, that adds up pretty dang quick.
Yeah.
Well, talk to us a little bit, Derrick, about how you also leverage the business owner aspect, because I know there's some businesses too. Talk to me about how you look at your time as managing those, how you got started in those, and are those businesses in the real estate that you actually own too?
No, those would not be real estate businesses, but it just goes back to I was young and real estate was great. If you look at your percent return on money, it was really good. But obviously it wasn't all cash flow, where businesses would be more cash flow. So that's where you get, I wanted to live off of it too, where real estate, the management fee I was paying myself wouldn't have been enough to live off of. Even managing 20 properties wouldn't be enough to live off of. So I'm like, okay, how can I take that management fee to steroids? And that's why I was like, well, let's look at a business. I don't want to be at this desk forever. Let's do a business. And then I first thought I would be happy working in the business and running my business, but then I'm like, no, that really wasn't it. It was really about the freedom and getting away from the job. So I'm like, okay, how do I pull myself out of that business? But I just dabbled in some different businesses because I wanted to speed things up. I wanted to be financially set and stable before we had kids, and I knew my ultimate goal was to have time for them, and that's kind of luckily it worked out that way so far.
Yeah, that's a really good goal though.
Yeah, that's all I really
Yeah.
care about now. So I told you before, I'm really offloading things to try to buy more real estate to have more time too. So that's what I said. I'm transitioning from real estate to business back to real estate. Yeah.
Yeah.
It's all
No,
about
I love that.
it's all about building a pile of wealth and cash to invest so that you can do the things you want to do.
Well, that's what I was going to ask you. Is that why you got into the business stuff in the first end? So you had more capital to be able to do the real estate deals?
No, not at first. Not at first. I ended up doing more businesses than I thought I ever would with friends and family. So I've leveraged not just money. I've leveraged my connections and people who I trust. They always say not to do business with family, but I think the complete opposite.
Yeah. I don't get when some people say that.
You look
That
at some,
blows my mind.
yeah, if you look at some certain wealthy families, I won't mention any just because, but they are all it's all ran by their family members. They're all part of it. They stay close to each other. Everybody in America, they seem like they're taught to move away, go do your own thing, which is great. Go do that, but if that's what you want, but you can do that and help other people, and they'll also help you in return. So that's kind of what I've switched to. I don't own 100% of my businesses, and
Yeah.
my first one I did. I was like, this is great. I own it. I'm my own boss. But when you're 100% owner, you are 100% an employee of that business. So nothing changed. So I was still
That's your baby.
Still
That's
didn't
your
have the
baby.
time. Still didn't have the time. Real estate seems like the best option to have that time, or investing with other people. And I trust my family and friends. I have a pretty small circle, so that's what I did. I'm invested with all the other businesses. I'm ran by my family members.
Yeah, I was gonna say, if you can't trust your family, who can you trust?
Exactly. I mean, I'm partners with other people too who aren't family, but yeah, I anybody in my family or friends who want to do something, I'm always open to it. I don't shy away from that at all.
Yeah, I love that. Derrick, if you could go back in time, say when you're first getting started, let's say 10 years ago, right? What past mistakes or maybe decisions in the past would you correct from like a real estate investment standpoint or maybe a business standpoint? What mistakes did you like? I go back and kick myself about stuff I wish I would have done 5, 10 years ago. Do you have any of those lessons that you could share with people?
Hmm.
Like from maybe from like a deal making standpoint or like so something along those lines. Just anything that you can think of off the top of your head.
Yeah, I can't think of anything specific. I've been pretty fortunate to have made right decisions. I do have a mom as an accountant, so
Yeah, that helps.
we go over the deals together, and I'm very optimistic and she's more on the other side, so we balance each other out. So every deal we kind of went through, it's like I'm too optimistic, she's too pessimistic, and we get in the middle, and the deals
Yeah.
always seems to work because the numbers tell the story.
Yep.
Don't trust anything about the numbers unless you have some other outside information, but it's really about the numbers. I
So you've
can't.
always had kind of I don't know if you'd call it like a team or a partner, but you've always had other people giving you input on stuff that you've looked to purchase,
Yeah,
right?
yeah. I'm always having other people smarter than you ask them the questions. Then it's hard to make a mistake when you run the numbers and you have somebody smarter than you helping you with the decision. Getting a second opinion.
Yeah, that's huge.
Financial advisors are good too.
Yeah. I
Yeah,
think
I
that
don't. I honestly, the only mistake I could think of making is that I thought maybe I didn't have enough time. Now it's been 10 years since I've really got started, I'd say, and like I told you at the beginning, I still have another 50, and so it's like I was rushing. Like, my advice would be like, don't rush unless you have a specific reason. And mine was, I'm not it's weird. I'm not career driven. I'm financial and freedom driven, so I can spend time with my family. And that was my reason for rushing and pushing for 10 years really quickly. But I didn't need to push as hard as I did, and just a little bit more life balance would have been probably better. But hopefully, I can make up for that on the back end. So
yeah, but it's not like you took on excessive risk that you're mad that you took on all this extra risk now. I mean,
no, not at all. I mean, the earlier you can get in, the earlier you can start, the better. The more you can start with, the better. Use all your resources because if you do any kind of compound interest calculator, 5, 10 years makes a huge difference, and putting way more in the beginning makes a huge difference. I mean,
yeah.
I put around that calculator more than I'd like to to tell you, just to see like if I do this or if I would have put more in here. Obviously, the only mistake I think I would have made is buying more real estate back in the day because of how it changed. But you didn't know that. Nobody knew that the COVID thing was going to change real estate as much as it did.
No,
I don't.
it's funny.
Yeah, that's really the only thing I could think of though.
I mean, you go back and look at some, like I was doing some financial planning updates with clients, and they were having second home aspirations in 2019, and the value amount we had on that versus the value amount on it now is a little different story.
Yeah, I have a funny story about that too. So I've been looking. So we just bought our first Airbnbs in Florida probably about a year and a half ago. Well, we've been looking for. I was looking before COVID happened. We were zoned. We were locked in on this property. It was probably 2019, and it was worth I think maybe 1.5 million. It was an Airbnb, and then one day I don't know why I did it. I looked it up to see like whatever happened with that property because we just didn't have the funds for it. We ended up coming across a property here in Omaha that was a commercial property, and those are hard to come by here, a nice one. So we bought it instead. So we felt like, okay, we can let this one go. But that property pretty much doubled or tripled in price. And when the last time I looked, it sold for me a year and a half later for $3 million, for example. It was crazy. I was like, wow, 1 year could have made $1.5 million. So I was it wasn't 10 years ago I made my first mistake. It was that. But that, I mean, that was
sometimes you look back at those and you're like, oh man, wish I would have done that. But you never know at the time.
Yeah, no, you can't.
You never know at the time.
I don't live with regrets. I don't worry about things I can't control. Just do what I can and just let things go. I don't hold any grudges or anything like that. So I do kick myself for that one though. That's the one that's the only one I'll let egg me for the rest of the day.
I got more than I want to mention. I want to talk because I know you're a busy guy, so I want to ask you a couple more questions. Is that cool?
Yeah, I have plenty of time.
Okay. So for people out there that are looking to get into real estate of some kind, what potential risk do you think they should be aware of when they're looking at properties? Like what risks do people need to be aware
of? The biggest one is if you go into commercial with it's I want to think. It's not a fixed interest loan, so it fluctuates every 5 years. And it's not so much the interest rate that's going to change in those 5 years that you have to worry about. It's if the value of the property changes. That's what happened back in 2008. A lot of people weren't on fixed interest rates, and
valuation goes down.
Valuation went down. So gotcha. when they go to refinance, the bank's only going to give them 80% of the value. So, and if you don't have more money to put in when your value goes down, you're going to be forced to foreclose on the property. That could happen. That's what I think is going to happen to a lot of people right now. Luckily, we refinanced all our properties in 2021 or 2022, and interest rates were really low. So that gave us a 5-year buffer. But I know a lot of people maybe didn't. And then 2019 or 2019, 2020, well, in 2025, their interest rates are going to triple or whatever, double, and that's going to make a huge difference. That is the risk of leveraging and put in. But like I said, if you just, I'm trying to think here.
I mean, I did read an article about this not too long ago that's what they thought was going to hurt some commercial real estate properties was when all these loans start to renew, and people are going from a 3% rate to a 6% rate, for example, or whatever it is.
Huge difference.
Yeah, that really affects the cash flow and the returns that are people on looking on these properties, especially if the properties have depreciated in value and they can't get the loan amount.
Yeah, it's not even so much the cash flow or that's when you go to refinance that 5-year loan. It's amortized over 25 years, but the rate changes at 5 years. And if the value is so low that the bank won't even give you money to basically rebuy your property again, then you have to sell, and you might sell at a loss. You might not be able to find a buyer at a price to even pay your loan off, and that's when you'd have to foreclose. So there are risks involved with that. I would say the less risky route is once interest rates go back down, or I would still buy today because you can always refinance. You can always refinance at a lower rate, but you can lease a residential. You can, like a single family, I think up to 4 homes, or like a fourplex, you can get a 30-year lock.
Yep.
And the Airbnb too, actually, you can get a 30-year lock, which is nice. It's a single family home. So you can lock those rates in, where the commercial, that's the risk involved, is if the values go down. But that's what I like about, again, it goes back to what I like about Nebraska is even in 2008, properties only dropped by 20%. The worst housing crisis ever, value drops about 20% here compared to 50 to 75% in Florida and Arizona. And
yeah, I was gonna say on the coast, that's nothing. A 20% swing in 08, 09, that's nothing, dude.
Yeah, that's what I like about Nebraska. Thought I wanted to get away from it, but I like it. I like it. Things stay how I expect them to stay, and that's nice. Yeah, that's the biggest risk though, for sure.
So would you say generally speaking that residential real estate is less of a risk than commercial real estate then from that aspect?
100%. Yep. You have a 30% lock. There's hundreds of thousands of homes that people are looking to buy. There's a market for it all the time. So the values don't drop because there's always somebody willing to pay at a certain price. Like I said, Nebraska only dropped 20%, even the worst housing crisis ever. So,
and it's easier to offload a home than a commercial property.
You can sell it to an investor. You can sell it to somebody looking to move in. So there is definitely a market for that. Where like in commercial office space now, your values dropped a lot. You're probably not getting renters. Those places are hurting for sure. That's what I like. That's why I say those strip malls. I like the strip malls because you can have an office in there, or you can have retail. So that's what I like about being right there.
Tons of different opportunities for them.
Yeah, where if you're in an office space, a big office building, or even small, and if all you do is office, then you're gonna be stuck there.
Yeah, I like your thought process on that. That was a neat one.
Yeah.
So Derrick, before I ask for your closing thoughts, what's next, man? What do you where do you see yourself in 5 to 10 years? What's next for Derrick? Same things or something different, or what do you got?
Yeah, I'm plan on doing the same things. I still enjoy it. I like building wealth. It's fun. It's kind of a game to me. I just play like the game. Just think of the game Monopoly. You have more spaces, more hotels, you're gonna make more money.
Yeah.
I just want to spend time with friends and family and stay local here in Nebraska. But other than that, I don't really have any other plans. Kind of looking more real estate. My business and my plate's kind of full on that end. That's taking up a lot of my time. So just kind of looking more towards real estate.
Yeah. I know we've talked before about you like opening up kind of a real estate fund. Have you thought any more about that or taken any more steps for that?
Oh yeah, I'm always talking to people about that. I haven't had too many opportunities come up that were able to do something with that fund yet or anything, but I'm still looking to maybe do that. It's always something I'm going to do. I kind of want to pay. That's kind of like my pay it forward. I don't want to be some like master teacher, or some big fund of random people. I would say I just want to help people that I know. Maybe three layers out from my friends and family group or people I know, and just really help them do what I've done over the past 10 years, and it's really worked out well for me. And I know, like we talked about, a lot of people don't necessarily know these things, and it's hard, or they don't want to, or they don't have the time. All they know is they want to make their money, make more money for their family and their security, and pay their bills and stuff like that. So, that's kind of what I've been looking at doing potentially.
Yeah, I love that you're thinking of that, Derrick, because that would really help a lot of people. I think, at least in my younger life, and as you age, I feel like you go from a little bit more me focused, a little bit more we focused, right? You know what I mean? As you've had some success and you're able to figure some stuff out, you're like, hey, it took me 10 years to get to this point, but I can help you accelerate that by 5x or 10x. And you doing that fund would be one of those exact things. I think that's pretty cool.
Yeah. Don't get me wrong; it's a win-win proposition. It's for them, and like I'm still going to help me too. So it's going to be like, if I can help myself and help others that I know and want to help, that's a win-win, and that makes me feel better about what I'm doing. It gives access to more capital to buy better properties, have more opportunities. You can buy bigger properties, smaller properties, but it really is just helping about. It really started with helping people, wanting to help people, show people what's possible, kind of thing. But I don't want to be some big go out there and give a bunch of speeches and things like that, and just be on some TV show, be on a TED Talk. I just want to help people I know, and that really is like helping people in the small town community I came from, or just Nebraska in general. And then, like I said, 3 layers out, why not help them, and then help me along the way too. So that's kind of just how I was thinking. Because I don't want to do business, but how can I do a business within real estate? And that's kind of where I came to that. But I'm not sure what I want to do with that yet.
Time will tell.
Still looking to make sure I have enough time for my family. That's first.
Yeah, I love that. I love that you're doing that. That's why I originally started the podcast and the book stuff, is because like
Yeah.
a lot of the stuff that's, maybe super general to you about real estate and like me, super general in finance, like a lot of people don't know that.
Yeah. That's what that's what I love about your books. Your books are not 500 pages thick. It's just it's what you need to know, and sometimes just the basics is all you need to know.
Yeah.
You don't need. If you start diving into too many details, you're just gonna overthink things. That's one approach. That's what I like about your books, is that they're quick and to the point. They're what the normal person needs. 99% of people don't even know those parts. And if you know those parts, you'll be ahead of 99% of the people, and you can get to the 1% that everybody talks about getting up to.
Yeah. Yeah. I love it, man. I love it. Again, thanks for taking the time to do this. I know this has been awesome for me. I mean, I got a ton of notes to help me moving forward with client conversations, personal stuff. But any closing thoughts that you have that you want to share, Derrick, on anything, life, business, real estate, anything that you can think of that you want to close with?
I don't think so. I'm not I don't talk too much. I don't know. I don't got anything.
You don't know.
I think I went over things about just making sure you keep your friends and family close. You utilize them, help each other. Like you said, if you can't trust them, who can you trust? Just utilize the resources closest to you and help each other. Don't try to go out there. You don't necessarily have to go find strangers to help start a business, to help do this. People want to put money in, they want to help each other. That's what we're all here for, So
yeah,
you start with your family, start with your close friends, and if that works out, if you can get past that, then you can expand a little bit. And that's kind of what I'm looking at doing, and asking outside people. I feel comfortable after 10 years of doing it that I can safely and responsibly do this for people. I mean, there's always risk involved, but I feel like I would call myself like an expert where I know every term of every financial tool and all that stuff, but you don't need to know that. The same with tax code, same thing with tax. I always think that these things are so complex and moving that people they think it's too hard for them to understand. But it really start with the basics, and the basic first layer of things is probably 75% of what you actually need to know. The other 25% is for the next level people who want to go way further and do way crazier things than you would ever really think about doing anyways.
Yeah.
Like I said, there's the term I don't really know is like EBITDA. That's like people, like I say that, and that's like a foreign word, and it kind of is, but like that's a real basic thing. If you just know that, and income and cash flow and cap rate would be the big thing for real estate. But just take it, be simple. I'm still simple. See, I'm still stumbling with my words because I'm not some real estate like genius who knows every single word that's in this real estate binder. I just know what numbers are important, is in a good area, does the building nice.
Yeah, I think the nuggets you shared today, Derrick, are going to be really helpful for people.
Yeah.
Especially, when they're first looking at this real estate, to kind of educate themselves a little bit on basic terms. And I think, like you said, you had a full-time job when you got started in it, and now it is I wouldn't call it a job, but it is what you do full-time now, right?
Yeah.
I think that's a super powerful story, is to just start a little.
Yeah.
And like you said, the doubling every 4 years, to have that in mind.
Yeah.
Refinance at appropriate times, and be cognizant of what you're buying and where you're buying it. Those are some great nuggets that you shared.
You covered it all. We could have cut this down to a 10-second spiel from you instead of 45 minutes of me talking.
I told you I took notes. I told you I got some good notes.
That's 100% all it is, and just start with one. You'll learn everything you learn from one. You can take it and apply it to 100. That's all you need to know is one. Do one. If it's too much and you don't really like it, you can always sell it. But one will teach you everything you need to know. That's what we started. We started with one residential. Then we started with one commercial. Now we have 6 commercial and 5 residential. But,
I love it.
Yeah, so you just got to learn. And if you just get into one, just start with one. You can turn that into 2, 2 to 4, 4 to 8. You'll have just set expectations. It's going to take time. I mean, 4 years seems like a lot, but it flies by. And if you could be a millionaire in 10 years, wouldn't you take that deal?
Yeah.
If somebody told you, here, just do these 2 things, in 10 years you'll be a millionaire, people are like, no, but I want the money now. I want to go buy this car. I drove my I was successful more than people knew, and I was still driving a 8-year-old Chevy Cruze. That's one story I like to tell people. But
Yeah.
I'm a car guy. So I made some stupid mistakes before that. Then I got the Cruze, and that's the longest car I've ever had before I did eventually sell it. But
Yeah, it takes time, dude.
yeah,
Don't rush it.
Yeah, take time, enjoy it, set up a plan, talk to Adam, your financial advisor.
Derrick,
He'll set you on the right path. He'll set you on the right path.
This has been awesome. And I know you're busy. So again, thank you for taking the time to do this. If you guys enjoyed the episode, I would love it if you'd give it a rating, share the episode out, and have a great day.
Hey, thanks for your time too. Keep doing what you're doing too. I see your posts. You're really inspiring too. So
I appreciate it, man.
Keep doing that. I like to see what you're doing. If we could combine your work ethic with my craziness, we'd be in good shape.
We'd solve the world's problems.
Yeah, pretty much.